All right, guys. Welcome to Futures Friday. My name is Merritt. I will be your host for the next half hour. And we want to do today kind of old school like we used to do back with the old Trading Conversations webinar, where we open it up and really devote this time to you guys in terms of what's on your mind, what would you like to discuss. Please use the Q&A box. You should be able to find that in the main Zoom window. It says Q&A. So that's where we'll take questions. While some of you start to, and by the way, we always run out of time. We don't have enough time to answer all the questions. So first come, first serve on that. So get them in there. While you guys are starting to populate some questions there, boy, what a day in crude oil in terms of early morning opportunity and what we saw there. As most of you know, I'm sure most of you saw the webinar I did with Bella, where he asked me to run one of our intraday meetings in-house on the desk and talk about crude oil because it's been in play. A lot of the traders, the equities traders on the desk are starting to say, hey, what's the deal with crude oil? Not only that, but Bella actually has a lot of people that he's mentoring and coaching even outside the firm who are really starting to ask him, hey, where's the bottom in this thing? I'd like to look for a place to buy this. I think it's oversold, all this kind of stuff. So what's the old saying? It's don't try and catch a falling knife. And so if you go look at that webinar, and if you're in our Slack room, which most of you are, if you're not in our Slack room, $7 a month. You definitely want to be that is our community. That is everything. Our virtual trading desk, we run it out of the Slack room. Everything we do is there. So smbfutures.com and join us over in the Slack room. That's where it all happens. Where was I? So there's a lot of questions, populating around buying a bounce in crude oil. And so I did this video. The recording is in the Slack room, so go check it out. And Bella says at the end of the meeting, hey, I've got these traders. They're looking to buy oil, looking for a bounce. What would we need to see in order for that to happen? And so I walked through a scenario where that would be feasible for my market worldview and using market profile to take a look at where distributions are forming, of where traders are building value, establishing value, as we call it, where some balance comes into the market. So instead of just saying, hey, I'm bullish, it's overextended, I've got RSI pulled up, it's below, what's a low RSI reading? I don't even know. It's below 20, I don't know, something like that. So it's a bullish signal for me. Let's get long. No, let's do a little more than that. Let's go beyond just kind of a standard indicator, and let's look for something really starting to confirm a thesis. And so what we've seen, just to tie it all in with coming into today, and what I talked about in the video was, let's wait for a couple of days, a number of days, to begin to at least balance. Let's wait for the panic selling to stop. Let's wait for some stabilization. And that's what we've seen over the past 4 or 5 days. So what are we doing? We're waiting to see, okay, let's say that I am that trader, which I wasn't, but let's say that I am that trader that's looking for that bounce. Well, we would need to see us begin. It's quite simple, guys. It's not rocket science. Let's start to see crude hold above that 4 or 5 day balance that we put in. That's a very, very bullish sign. If we can break and hold beyond that area, that's really, really bullish. Well, what happened last night? We failed out of the upper end of the 4 or 5 day range. What happened just before the pre-market this morning? We began holding below that range. So there was very clear, very big opportunity, and not only opportunity for traders like myself and my team and all my students and whatnot to the downside, which many of them did a beautiful job today of capturing that early morning opportunity. Not only that, but what's the other thing that we also need to talk about so much, which is when not to trade. Okay, when when is your actual trade thesis being validated by the market? When is it time to put on that opportunity? So if you're a bottom feeder, bottom picker, looking to catch that falling knife, but looking to do it in a responsible way, well, this morning wasn't that opportunity, or early on. As long as we're holding below that area, um, you got to be at least short-term bearish that market and wait for a better spot to get involved. So I just thought that it was a really important morning sequence to discuss, tie it all in with video from a week ago, 2 weeks ago, where I'm discussing these things in real time with our traders on the desk. The head of the desk, Bella, is asking questions specifically regard to potential bounce situations in oil and what I might look for, and how that all ties together into today, where this morning that wasn't a situation. It was the opposite. So it's one of the main points of this whole spiel I'm going through here is you can't just be attached to an idea as a trader. This should happen, right? You guys have heard me do webinars with Jigsaw and other people where I constantly talk about trade what is. Don't just speculate and guess as to what should happen next or what might happen next. Trade what is. So the mental flexibility for a trader that does develop a bullish bias, there's plenty of times where I develop a bullish bias and it doesn't work out. Okay. There's plenty of times where that happens. But I'm going to have areas where there's a line in the sand where if we can't hold that, then I'm going to be flexible enough to actually shift my thesis. I'm going to have prepared alternate scenarios before the session ever even opens as to, okay, we can be bullish above here, but below there, I'm going to maybe neutral, where I could trade in both directions, or I'm going to be outright bearish, where it's only shorts only as long as we're holding below that level. So it's just really important to structure your day, to develop alternate scenarios, to not just be bullheaded about an idea that you may have developed, and really trade what is. So a lot of really important lessons there from just a simple, great little morning sequence from crude oil today. All right, so let me check on the Q&A box, see what kind of questions we have here. Hey, Merritt, can you share with us what music is playing as a background to the S&P Futures intro video? That's a great question, Ivan. I have no idea. Our team picked that out from some website where you can kind of get just stock music and purchase a license to use it. Um, and that's what we did. So, it's kind of an unknown artist kind of track. Um, sorry about that. How do you recommend that somebody transition from scalping the ES for 1 to 3 ticks to adding some larger, more meaningful strategies and or markets to what they're doing? That's a great question. So Alex is a short-term scalper. 1 tick at times, 1 to 3 ticks. That is the ultimate short-term scalper there. You're getting close to being an HFT yourself. So transition from that to adding some longer, more meaningful strategies. So maybe, sure, 3 ticks is better than 1. More meaningful may not be the right word there, but your scalping may suit you best. So don't count that out necessarily. You may be really drawn to that short term of time frames for a reason. It aligns with your own strengths and weaknesses, the way you see markets. But this is a great question because I do think it's important for a various number of reasons, to perhaps not be a one-trick pony in that sense and be able to do some things across multiple time frames, including longer time frames and whatnot. So when it comes to actually doing this, I really think that context is king. And many of you have heard me say that phrase before, but when you're in a scalper only world, okay, there are limitations to the trading world, okay? On one far end, you can be buy and hold. And on the other far end, as a human, we, with our brains and our physical abilities, can only do certain things so fast. So you're actually operating on the lowest spectrum of human short-term trading, okay? So it's important to realize that the environment that you've been operating in is a very specialized environment. For you to be looking for 1 to 3 ticks, I dare say that your entire spectrum of your entire toolkit of things and variables and references and indicators and whatever variables it is that you're using are almost entirely order flow driven. They're almost entirely momentum driven. If I were to just take put you in a box and make a general guess there. So those tools are great for determining the next 1 to 3 ticks of the market's direction. That's great. Those are what reigns supreme for that. But as you transition to looking for, let's say that you even move to being able to look for 4 or 5 point rotations in the ES. 4 or 5 points is a world of difference compared to 1 to 3 ticks. It really is. It's a big difference. You're now more of a what I would still call kind of a scalper, where you're only looking for direct swings, direct momentum, direct rotations. But I dare say that you're going to need some multiple time frame analysis and some form of that to frame context. So you're no longer just going to be able to stare at a dome or a jigsaw tape or whatever it is that you've been using, a footprint chart, to gauge bid and ask volume and the immediate strength or weakness of buyers or sellers and just capture very short bursts of activity. You're actually going to need to incorporate more higher time frame information. So for example, if you're going to look for 2 to 4 point rotations on average under normal circumstances for the S&P 500, the E-mini, you're now going to need to have an idea of where these, not just that immediate impulse, but what's the overall trend and on what time frame that you're concerned about what the general flow is of the market. And not only that, but then the context of that, let's call it in your case, intermediate term momentum, the trend. What's the context within that sits within? And for me, hands down, I mean, I used to be nothing but a naked price action trader. That's all I used. And so for me, the introduction of auction market theory, of volume profiling, of market profile, especially market profile, was a total game changer. I mean, it opened my eyes as to what we call the current condition of the market, whether it's rotational. So we would apply certain perhaps mean reversion tactics, whether it is what we call imbalanced or trending, such as this morning when we're breaking away from a 4 or 5 day range, and we want to go with that momentum. So, markets oscillate between spending time balancing and trending. And so to be able to have a really good framework that simplifies down complex data, to tell you what that condition is and where that condition would change, and if more of the same is to occur, where we might even go to as a destination, These are all really, really, really important things that you want to develop into what you're doing to be able to intelligently pick which potential 2 to 4 point rotations are skewing risk reward in your favor the best, are skewing the probabilities of success um, in your favor the most. And so context is king. And at the end of the day, Market Profile does a really, really good job of that. So for you, take a look at daily profiles, where distributions are forming, where we're trading relative to those. And I mean, I have a multi-hour course you can take on Market Profile, and it's on our website at smbfutures.com. So great question. Good luck with the transition. It will be challenging. You'll need to take your time. Don't just start trading live and think that you can immediately apply what you've been doing to these bigger time frames, because you're gonna need to develop a better market worldview, which is what I call kind of the contextual framework, the way you understand movement. That's what Market Profile is going to do for you. So you're going to need to develop some skill sets around identifying that. And then the really cool thing is that you're not going, the skills that you've developed as a very, very, very short-term trader, you're not going to abandon those. When it comes time to pulling the trigger or not pulling the trigger, you're going to have a very well-rounded skill set now, in terms of applying that last moment, shortest time frame entry decision and managing risk, aka enhancing your risk reward on those lower time frames. Um, it's going to be a good fit. All right. Well, I hope that's helpful. We are just about out of time. Today's going to have to be a bit of a shorter session, but I thought that was a great question. It's a really good one to end on. And hope everybody has a great weekend. And we'll see you next week, same time, same place. Bye bye.